Elon Musk has made it his mission to accelerate the car industry's transition to electric transportation, with plans to price the Model 3 close to $35,000 before incentives. The vehicle looms large as a linchpin in Tesla's plans to manufacture at high volumes and achieve the profitability that has eluded the company in all but 2 quarters since going public. However, the future doesn't come cheap, and Tesla has been a serial spender under Musk. Through the first half of this year, the company will have spent around $1 billion in R&D, according to Morgan Stanley. They highlight that Elon Musk is burning through cash throughout the company, from infrastructure, retail, sister ventures, and manufacture, and to the point that he may need to raise additional money soon in order to produce the Model 3 that Tesla is banking on to reach the mainstream consumer. Look, let's be clear, Tesla doesn't have a problem with its cars. They impress everyone who gets behind the wheel. Whilst the product is great, it hasn't stopped many from highlighting 3 major concerns about the future of the fledgling car and energy company. Firstly, cash, and who's paying for it all. Tesla's cash supply situation was dragged into the open earlier this summer by billionaire hedge fund manager David Einhorn, who highlighted the company's expectation that it would need to spend just over $2 billion this year alone before it began production of its new lower-cost Model 3. Einhorn's fund, Greenlight Capital, has bet against Tesla, and the investor reportedly told a conference call that the car company is currently only capitalized for the next 3 quarters. Furthermore, as Tesla's attempt to achieve scale for the Model 3, he says it'll have to draw on capital markets' willingness to fund it. But the markets themselves may have questions, such as when Tesla may start to get out of the red and into the black. While Elon Musk said the company remains on track to produce 5,000 of its eagerly awaited Model 3 vehicles per week by the end of this year, and 10,000 a week before the end of 2018, some have expressed doubts about the company's ability to meet that goal. The jitters about Tesla's ability to meet production deadlines comes after the falcon-winged Model X launched 2 years behind schedule and experienced production glitches, making it challenging for the company to boost auto production from around 80,000 units last year to its stated goal of 1 million units by 2020. Analysts at JP Morgan also noted that they were cautious given the potential for a slower start to Model 3 assembly, and cautioned the potential for Model 3 pre-order cancellations may increasingly become a point of investor concern. Following a second successive quarter of declining customer deposits, there has been some concern of the so-called OSBORNE effect tied to the launch of the Model 3. Named after the eponymous failed computer company, many have raised concerns as to the negative impact the announcement of its future products is having on sales of the company's existing product lineup. As General Motors, Chrysler and Ford can all attest to, making cars is a cash-intensive business, and Tesla is planning to spend much more in the months to come as it aims to hit its ambitious production targets. Meanwhile, the signals coming from the leadership team suggest Tesla is going to have its hands full. At the launch event for Tesla's new Model 3 compact car, Chief Executive Elon Musk reportedly said that the company was about to face 6 months of manufacturing hell. Tesla has said it wants to build 500,000 vehicles in 2018, and the company has also set a production target of 5,000 Model 3s per week for some point in 2017. These goals, however, could be a tall order. The carmaker said its production was just shy of 25,500 vehicles in the first 3 months of this year. And in a research note, BARCLAYS said of Tesla that the inability to execute, i.e. ramp up its production line, could lead to an unravelling of its strategy and ultimately yield a severe cash crunch on its business. But as Tesla ramps up manufacturing, the company is also undergoing some serious labour disturbance. Following the departure of Tesla's chief financial officer earlier this year, Bloomberg reported that the company's veteran director of battery technology had also parted ways with the company. Tesla was quick to announce a replacement for its CFO. Whether it can do the same for its chief battery engineer remains to be seen. At the ground level, Tesla is also taking heat from some of its employees over health and safety concerns. A recent open letter from the Tesla Workers Organizing Committee to the company's independent board members said that the car maker's injury rate in 2015 had been above industry standard. Tesla has ridden its status as a growth company to appreciate its stock price by more than 600% since 2012. The company, led by the charismatic visionary Elon Musk, captured the imagination of the public and analysts alike as price targets continue to climb higher. But beneath the attractive facade, Tesla's true financial health is much more fragile than is often portrayed. Sales targets have been badly missed both domestically and internationally. And the company has been burning through cash at an astonishing rate, posting increasingly negative cash flows. And yet, it is on this shaky base that the company is projecting wild growth, massive expansion, and significant capital investments. Indeed, CEO Elon Musk insists that this staggering amount of money on capex will be covered from cash flows that are currently non-existent. In short, he is gambling his company's future on a wildly ambitious ramp that, if it falls short, will leave the company deeply in debt and scrambling to avoid bankruptcy. We mustn't forget that the company nearly went bankrupt in 2009 over cost rollouts and delays, only to be saved by a government bailout. This has left many wondering if the company has not learned from its experience, as its latest annual report highlights both delivery lapses and deteriorating margins. There is no doubt that Tesla makes wonderful products, is an innovative company, and has a visionary CEO. But this still leaves many wondering if Tesla is running out of gas.